Good evening, everyone, and welcome to Admiral Markets webinar. Today is 9th of September 2015. My name is Nenad, and pay attention to this webinar because we will be talking about how to create a daily routine and how to make a plan B. So this should be a complete guideline for all of you who are who still cannot make money consistently and who still suffer from bad trading decisions. So this webinar is important even for some traders who have long been into this business but still are struggling to make profits. Okay, so how to create a daily routine and how to make a plan B. Okay, my name is Nenad, as you already know. I've been with you the last 2 or 3 years, constantly with webinars, and you can always enjoy our session recaps, price action training school, and other things. Of course, Admiral Markets. Risk disclaimer stating that online education materials are developed by Admiral Markets Estonia and that information is not suitable for everyone. So if you want to get a corresponding information on every detail, you should go to admiralmarketsglobal.com, select your country, and contact an appropriate entity. Risk disclosure statement is stating all possible risks associated with Forex market, and by proceeding further, you're also accepting the risk disclaimer. Admiral Markets will take no responsibility for information accuracy. This is by any means, it's not Admiral Markets Ltd. It's my opinion, and Forex is risky business, and this webinar is used for informational and educational purposes only. We are also having a trader from Chicago. His name is Jack. So hi, Jack. He's saying hello from the windy city, Chicago. Yeah, Chicago is a huge city in USA, and it's also industrial city. So a lot of people from this part of the world have been traveling to Chicago and taken their permanent residence. So hello to US traders. And now, guys, we can continue with our webinar. So if you want to enjoy full power of MT4, as always, try to download Admiral Market Supreme. Okay, Admiral Market Supreme Edition. Okay, just confirm that you can hear me. It looks like we are having some connection problems. No sound. Okay, guys, yeah, probably we had some connection problems, and now I switched to my second cable network. So actually, I'm hosting two cable network. You can just confirm that you can hear me. I think that there is a sound now. So let's do a quick sound check, and we can continue. Okay, let's do a quick sound check. Okay, do we have a sound now? A quick sound check. Okay. Okay, it seems that audio connection has been restored. As I was saying, we had some problems with audio, so actually, yeah, I think that we have sound now. So, okay, I advise you to download Admiral Market Supreme Edition, and actually you can do that by logging into Traders Room. By doing that, you will have a great tool at your disposal. Okay, so agenda, trading plan overview, key benefits, know yourself and your purpose, plan B and exit strategies. We will be talking about this today. Okay, so what is a trading plan, guys? A trading plan is a complete set of rules that covers every aspect of your trading life. Okay, so many analysts, many experts, many teachers will refer to the need to have an edge, which will tip the balance of probabilities of success in your favor. So a trading plan is not an edge, but over time, a trader with a plan will fare a lot better than a trader without one. Okay, so many amateur traders do not have any sort of plan to trade by. Okay, and enter the markets with scant regard to their risk and profit objectives. So comprehensive risk and money management strategies lie at the very heart of all good trading plans, okay? So it's crucial for you to know that trading plan is a must, okay? Traders with a plan have the ability to monitor performance. So if you have a trading plan, you will evaluate your progress continually day by day in a way that is objective and very comprehensive. Okay, so that will definitely that will help you to trade without any emotion and without a stress, which is very important. Okay, so trading for people who don't have a trading plan is nail-biting, emotional roller coaster ride of stress that inevitably will result in a financial loss. Okay, a plan will not guarantee you success. Okay, but I think we know that Mr. Alpesh Patel wrote that while a plan cannot predict the future, it can lay down how you react to the possible outcomes. You control the only thing you can control, and that is yourself. Okay, so you should know that by having a plan, you control the only thing you can control, and that is yourself. Okay, so some confusion also exists over the difference between a trading plan and a trading strategy. Okay, so we need to know that a trading plan is complete set of rules which includes trading strategy. Okay, so needless to say, you will probably ask yourself, and maybe me, who needs a plan? Who needs a trading plan? Well, guys, it's obvious you need a trading plan. Okay, every one of us needs a trading plan. Okay, so it's simple as that. John O'Groats is lying at the northern part of UK. Land's End is at the southern part. So to embark on a car journey from John O'Groats to Land's End without a good road map is unwise. Okay? UK is an island, a big, huge country. And if you want to travel from the top to the bottom, you should have a plan. It's same for trading. Completely the same. Because you will be swimming, and you have been swimming through shark-infested waters, and you need tools to swim successfully. Okay? Final destination will be profitability, right? And preferably consistent. Okay? So you need to embark on trading with a clear idea where you're going and how you're going to get there. Because almost certainly result without a plan will be increased stress, sleepless nights, and financial loss, or maybe all three. So the question you must ask yourself is, if you would not dream of driving from the north of Scotland to the most southerly tip of England without a detailed road map, why on earth have you not have a detailed and clearly laid out trading plan? Okay, what will a trading plan do? It will make the act of trading simpler than it would be if you traded without one. It will limit your opportunity to make bad trades, and it will prevent many psychological issues from taking root. Okay, definitely. It will help you to achieve these things because wherever you are on your trading journey, it will not only act as a roadmap, but you can also locate your position as well. If your trading is going badly, you will not going to drink, right? We will not use the old adage saying, when the going gets tough, Bart goes drinking. We will not do that. Because when the going gets tough, you will know it's down to only one of two possibilities. Either something in the plan is not working, or maybe you're not adhering to the plan. If the plan is a good one and it is back tested and paper traded, or maybe forward tested with a demo trading, then the fall is likely to be found in the latter of the two options. But what if you're losing money while still having a plan? Well, guys, then you need to check plan B, definitely, and we will be talking about that. So a trading plan is your personal GPS device to locate your position, in your trading world. You will be able to evaluate continually your result and, more importantly, your discipline. It's a manner that is objective and comprehensive. It's a manner of trading gentlemen. It's extremely difficult to do if you do not have any plan, if you are not a trading gentleman. Why do I say trading gentleman? Because you need to respect market. And only gentlemen respect women, right? Women. And if you do not respect her, Mrs. Market or Mr. Market, it's not good, definitely. If you made a wrong turn, there is no back. There is no getting back. If you chase a shadow, you will never catch it. If you stand still, your shadow will come to you. So if you make a wrong turn, it will be easier for you because you will identify where you went wrong and how to get back on track. So, taking away much of decision making in the heat of moment, that is very, very important, guys. Very important. Emotional issues are very powerful when real money is on the line. And real money will force you into irrational decisions. With the correct plan, your every action should spell out, so in the heat of the moment, you do not have to make any decisions because you already have set your trading plan up. You will do what the trading plan stipulates you to do. Okay? And remember, and you already know it, real plan, real money can force you into rational decisions. So key benefits of trading with a plan is, first of all, relaxed, stress-free trading that is simpler with a plan than it is without one. You will be able to monitor your progress, diagnose faults, and amend the plan accordingly. A plan will help you to prevent many psychological failures and issues from taking root. And I'm saying from taking root. A plan will reduce the number of bad trades. It will help irrational decisions in the heat of the moment. Okay? In the heat of the moment. A plan will enable you to control the only thing you can control. It's yourself. Okay? Overshadow the gambling psychology in your mind. Roadmap. Make you profitable. Okay? And the final part, what Darshan is asking, was the missing point, the lonely bullet. Here is basically, it will enable you to trade outside your comfort zone. How many times have you let a loss run and cut a profit short because it was the most comfortable thing to do? Okay, this is done on purpose. You should realize that by now. Okay, 100% of you guys, at least 10 times in your life, have let a loss run and cut a profit short, because that is, of course, most comfortable thing to do. Well, you need to get out of that comfortable zone. Get out of it. I know that it's a hard thing, but that is why we use risk management strategies. Okay? Okay. Now the key is risk management. Okay? You need to understand your own psyche. Okay? Definitely. Your own psychology, your own ego. And that is the hardest part of trading. Now, having comfortable thoughts only for use for thinking of making profits, it's okay, it's not a problem. But it's how you control them while you're trading. That is the problem. It's good for us to be in a comfortable zone. It's good for us to be in a profit, right? But how we control our emotions while we are in the profit, while we are in a loss or we are trading, that is the problem. Okay? Think about it and be brutally honest with yourself. Do not pretend to be someone you're not because you're embarrassed to commit. Pen to paper and admit that you're a thrill seeker chasing holy grail of easy money. Okay, you are a thrill seeker chasing holy grail of easy money. Well, we all started like that. But when we uncover the real motivations, fear, and desires which fuel our ambition, we will realize the ultimate truth. Everything is good as long as our risk management is correct. And our psychology. Definitely. Okay? Your answers to questions which I will be asking you should be definitely clear and succinct. There is no room for ambiguity in your plan. So try to be honest, not vague you with fuzzy statements. Okay? So almost any professional trader will tell you that the key to success is understanding your own psyche. Okay? But you also need to know that many inexperienced traders are unprepared for a violent assault on their thoughts and emotions at the start of the career. They will find their head spinning with euphoria when winning. We already talked about it. They will enter in a probably in a cycle and spiral of doom. And well, the pits of their stomachs will be knotted with anxiety when losing. Besides that, you need to understand why that is that you want to be a trader. What is your purpose? What does success as a trader mean to you? How sad it would be if after a year or more and hundreds, if not thousands of pounds later, you realize that trading was not for you after all, and the ladder to success was leaning up against the wrong wall. Well, plan B, guys. Plan B. Okay? You should understand your sentiment, other trader sentiment. Okay? You should understand market sentiment. And definitely, you should strive to achieve trading nirvana, trading peace. Okay? Because heads will not spin, nor stomachs will churn. Okay? So question your true motivations. Examine whether your talents would be better suited to another business. Are you certain that trading is the right business for you? If you really believe that markets exist for the sole purpose of showering you in vast quantities of easy money, okay, think again. This is not an easy option. What sort of trader are you? Are you a discretionary trader or mechanical one? I'm not a mechanical trader. If you have been following my analysis, you know that I always use a huge amount of technical aspects, which are even better if they're aligned with fundamental facts. Euro yen, for example, today went straight from POC, and I did the analysis yesterday basically because I really wanted to show you okay, we still have sound problems, but now it's again, it seems okay. So I really wanted to show you a good point where to enter the market. So I needed to do the analysis during the night. And after that, Euro yen dropped straight from POC, giving you 75 pips of potential profit before it bounced back to our entry point. So I'm not mechanical trader. So you need to understand, will you trade price action or will you trade a system? If you want to trade price action, then please enroll for my price action trading school, which I will be holding and I have been holding for last 2 weeks, and it will be done for the whole year. Price action trading school, because it's not mechanical trading. Okay, do you want to trade in the long term, medium term, or short term, guys? Okay, when you want to trade, okay, when is that you want to trade? Okay, generally speaking, day traders are glued to their monitors. I'm a day trader and I'm glued really to my monitor. But position traders maybe devote approximately 1 hour a week to the market. So swing trader, day trader, you should decide it. What are your strengths and weaknesses, guys? Okay, what are strengths and weaknesses? List each of your trading strengths within your mind and weaknesses, and then talk to yourself. Specify how you will maximize the benefit of the former and minimize the damage caused by the latter. Suppose that you're an ex-fighter pilot who is used to working in a highly disciplined environment. But a flip side of the coin is that you may also have a need for fun, addiction to adrenaline pumping, nail biting. Okay, trading is also good for gamblers. And you know that I support that attitude. I would never say, okay, you're a gambler, do not trade on Forex market. I would never say that, guys, really. Because if you're a trader, definitely, guys, you should think about trading. If you're a gambler, think about going to casino. Yes, to casino. But do not tell anyone that you will be gambling. Try that on Forex market. Try that at your home. Okay? Try that at your home, because even gambling in Forex market is better than gambling in casino. Okay? Your background may provide some clues. Your background. Are you in the right frame of mind to trade? Your mindset is the key obstacle that lies between you and success in the markets. Have you slept well? Are you fit, healthy, and mentally alert? Okay? Are you calm and relaxed, or are you tired and distracted by other events in your life? Okay? Think about it. What are your income targets? There are numerous reasons for becoming a trader. Making money is the one reason that unites us all. It's important for you to know your financial targets and to break them down into daily, weekly, bite-sized chunks. There is an old adage saying, by the inch it's a cinch, right? By the yard it's hard, and certainly applies to traders. Needless to say, if your strategies generate 2 or 3% a month, well, it's good. It's still good. Your targets are not idle fantasies. They must be based upon reality. Do reality check. Back and forward test your results. Always do reality check, guys. Always do reality check. Okay? Now, trading goals. Setting goals is an essential part of your trading because the trading goals will provide you with a beacon to work towards. The ability to track your progress and the motivation required to get the job done. That's also very, very important. Job done, okay? It's always good to hear that. Try to define your goals in terms of your development as a trader. The financial rewards are sure to follow just as night follows day. It's a cycle. You know that I always say everything is connected in this universe. And not in our earth, in the whole universe. We all came from a single point, singularity. And from that singularity, there was a light created. Billions and billions years ago. For example, the reward should be profit, but that not should be your ultimate goal. Think about your annual trading goals. This is the big picture, okay? Big picture. Think in terms of the skills and knowledge that you want to acquire between now and this time next year. Okay? What are your monthly goals? Define your monthly trading goals. How will you achieve these goals and how will you reward yourself when you do? What are your weekly goals? And you can define also daily goals. Okay? You need definitely to have a plan B. If nothing, guys, is working for you, if you're still a losing trader and you have really a habit to lose, unfortunately, and not to make any profits, then definitely you should have a plan B. Okay? Which markets will you trade? Which markets are bad for your account? And when I say markets, I not necessarily think about forex trading. Maybe futures, index futures, indices, exotic pairs, commodities, stock market. Okay? If you're losing in euro-dollar trades and pound-dollar, try to switch. Try to trade other pairs. Okay? Try to trade other pairs. Maybe your plan B should be changing time frames, guys. Some people love to scalp, but some people are definitely better when trading longer time frames. Okay? Sometimes it's better to trade longer time frames. Okay? Will you change time frame? It's up to you, guys. It's up to you. Okay? Do you have daily pre-market routine? Do you have any pre-market routine? You should do your pre-market routine every single day. Check every day. Check the instruments before the market open. Try to begin trading without doing your homework. Is a bit like embarking on a car journey from John O'Groats to Land's End. What is your daily pre-market routine? When your pulling the trigger happens, do you have any additional capital to cover for plan A loss? Always have additional capital at your disposal. Analyze your losses. Have you completed your analysis of yesterday's trades? Sorry, log them and updated your journal. Did you adhere to your plan And if not, what effect does this have on your trading activity today? In other words, your ability to stick to your trading plan yesterday should determine your trading activity today. What did we say? Past plus present is the future, right? 1 plus 2 is 3. 2 plus 3 is 5. 3 plus 5 is 8. Fibonacci sequence. Sticking to your trading plan yesterday should determine your trading activity today and will determine near-term future. Analyze your losses. Switch to other time frame. Did you ever check current market conditions? Ever, guys? Probably you didn't. And because one of the reasons is this should have be your plan B. Check your current market conditions. Because are there any major news stories impacting the markets? What are index futures doing? What are Chinese stocks doing? Are there any key economic reports due out and what time? Before trading, you should check and then make a list. As a day trader, you might consider definitely retracement strategy to trade the open, breakout strategy after the first half hour, and reversal strategy for evening. Always check that, because usually this is how your trading day looks like. Retracement strategy to trade the open, well, bang, down, Frankfurt Freight, we go. Breakout strategy after the first half hour and reversal strategy for evening. This is how market functions usually. Plan B, check it. Okay, assess your attitude towards risk. Maybe this is an odd statement, but it's a good starting point to ensure that your feelings about risk are compatible with your trading style. You should think of the market as a nuclear reactor. The more you're exposed to radiation, the greater the chance of getting burned. Guys, this is important for you. Think of it as a nuclear reactor. The more you're exposed to radiation, the greater the chance of getting burned. Market risk is measured by the amount of time you're in the market. It could be seconds, minutes, hours, days, weeks. Not every day is for trading. Not every day is for trading, guys. Okay? So assess overall market risk always. Decide the maximum amount of capital that you will put at risk at any time. Be prepared for the worst. Okay? Many traders will not risk more than 1% on any trade, with a maximum exposure on all open positions of 5% in total. That is why I suggest you always before our session recap, do maximum 5% per risk, 1% per trade, 5% in total. 5%, it's not disastrous for your account. And we almost always have winners. Did you trade on last recap dollar Swissy? Even euro dollar has gone in a profit because stop loss has never been touched. We had only one loss, GBP dollar, but there is only 2% of a loss. Dollar yen trade, the ultimate winner. You could have made 200 pips without any point. This was the best trade of session recap so far. And I need to say, this has been the best session recap so far. 200 pips on dollar yen. I advise you to scale out. And drawdown was not existent. So market risk should always be taken into account. What is the sector risk? Have you ever thought about sector risk? Okay, always think about it, guys. Anyone who saw the fictional television drama The Man Who Broke Britain on BBC will recall what happened to the city trader who was overextended in a bank that traded oil futures very heavily. She and the bank did well until terrorists blew up the world's largest oil refinery. No fat cat bonus for the city trader and no job. So one way to control sector risk is to limit the number of positions in any one sector. Okay, let's talk about harder risk now. What is a harder risk? Suppose that maybe your server goes down and you have no way of closing your position. How will you handle scenario? What will you do if you need to take action when your PC crashes? My hardware risk is always I have 2 internet connections and I lost sound today during this webinar, so I needed to have additional connection and I'm on my plan B connection at this point. Okay, so think about it. What is the strategy risk? The markets are constantly changing, and a strategy that was profitable last year may not be profitable for next month or year. That is why we are having always good webinars, great webinars about trading. And that is why I have started Price Action Trading School. Okay? That is what you should always pay attention to. And I'm really enjoying to teach you how to trade price action. So strategy risk is, for example, your once brilliant and hugely profitable strategy no longer works. So you should assess current market risk and conditions and your strategy risk. Okay? You should know what is the profitability and probability of successful trade. Always assess strategy risk. Okay? Revise your money management, guys. Revise your money management. Large drawdowns and profits. What will you do? Your trading capital must be money that you can afford to lose and be set aside from everyday expenses. If you lost the lot, it should make no difference to your standard of living. Clearly define in your plan the extent to which you will credit additional funds to your account. Okay? Use profit stops. Today on my Euro-Yen analysis, I was good for some 30-40 pips because after the price went 50-60 pips in profit, I used profit stop, moved my stop loss to plus 30. So I'm still profitable. And if 135.50 is strong, I may open additional position. So profit stops are always used. Will you lock in profits? Will you lock in profits? Utilizing a trailing stop to give you a profit stop to lock in profits is the right side of your trading strategy. It has 2 clear advantages. At worst, you may end up with a scratch trade, as Caroline did today. He's saying he was in a good profit of Euro-Yen, but eventually he ended up at break-even. So you may end up with a scratch trade, but no losses. At best, it will allow your profits to run, which will enable you to take a sizable chunk of the expected move. If you don't want to use profit stop or trailing stop, guys, use scaling out. So let's say that you open 0.3 lots. So remove 0.15 as a profit and let the other half run. Determine proper position size. The size of your position should never exceed the parameters specified in your risk management rules. That is why you should always have additional plan. If the first plan didn't go quite well, then plan B should specifically stating that your position should never exceed the parameters which are specified in your plan B. So there are many options available. Maybe some strategies are having a high probability of success, so you can trade aggressively. Other strategies might have lower probability of success, but your risk management criterion dictates a more conservative position entries. Analyze your exit strategies, because exit strategies are harder to get right than entry. We are always thinking about entries and we are not paying attention to exit strategies. But exit strategies are very important because they will control the profit and loss, and they are controlling the profit and loss. If you trade more than one strategy, you need to know these questions for each strategy employed, because the signals will vary from strategies. Okay, because market is dynamic, so you need to know when to use trailing stop, when to use scaling out. Try to use scaling out always. Ask yourself, what will happen when your stop is hit? Will you exit before your stop is hit? Some strategies always exit the trade at a point that the stop loss is triggered and not before. But you never know if the market will turn. So that is why trailing stop is good or scaling out is good. Which signals will see you exit early? If you opt to close the trade before the stop loss is filled, what are the precise signals that will trigger your exit if you're doing scaling out? Which signals will see you exit completely? There will be times when it's advisable to get out and fast. Be prepared for those occasions and know in advance what signals to watch out for. Okay, winning trades. Which signals will see you close half? Popular approach is to scale out, close half for your position at the first target or at the first sign of weakness and let the other half run. So that time you will be enjoying so-called free ride. Okay? Scaling out, guys. Try to adopt this strategy, scaling out. Because exit strategies are more important than entry strategies. They are in control of your loss and profit. Exit strategies. Which signals will see you close the remainder? Even if your exit strategies are well planned and executed, well, the success will still be how you exit the second half of profitable trade. Try to scale out, locking your profits and putting your stop to break even at least. Discipline. Okay, be disciplined. Really, really, really. That is very, very important. Be disciplined. Having a comprehensive trading plan with detailed entry and exit criteria and excellent risk and money management will count for nothing if you didn't adopt it. This is your plan B. Implement your plan B. Adhering to your plan is easy during periods of profit. Very easy, guys. But the real test of you and your psychology will be your ability to stick to it when your trading is not going so well. You know that already, right? It's good when you're in profit, but as immediately after you suffer a loss, you tend to basically change your routine. From time to time, we will have losses. Yes, New Zealand dollar didn't go quite well. But if we had a good trading plan and with good money management, it's only 1 or 2% of a loss. Even I have losses sometimes. Great, I won on dollar Swissy. I won on dollar yen. The best trade so far on session recap. Not a single pip of drawdown and more than 200 pips of profit. I won and we together won, even on euro dollar. Okay, euro yen, constant streak of wins, but we also have losses. And I'm not the only one who have some losses from time to time. Even banks, huge banks, like Citibank, recently had a huge loss on euro yen. Does this make me a better trader than Citibank? No, guys. It doesn't. We are not talking about who is good, who is bad, who is winning. There are literally 100 different ways to win the market. What is most important is stick to your plan and stick to your exit strategies. Do not stray away if your trading goes bad. Okay? Always be disciplined. And if you stray away from time to time, think about it. Backtest or forward test. Backtest your psychology. Backtest. Think about your promises. Not empty promises, real promises. What are your promises to yourself? These are promises that are designed to enforce self-discipline. What sanctions will you impose upon yourself if you break out of your trading rules? Worse still, what about if you break 2 in a row? Okay? What questions will you ask after winning trade? What questions will you ask after losing trade? Do you want to learn more about trading? Have a plan, guys. Always, always plan the trade, trade the plan. Always, always, and forever. Trading is not gambling. You can gamble, but it's not gambling, it's business. However, the trader who enters the market without a well-conceived, detailed plan is no better than a punter who throws darts at a board blindfolded in order to determine which horse to back. Keep it simple, guys. Maintain discipline. Keeping excellent records will enable you to see at a glance how disciplined you are in your trading. Failure to address issues of self-discipline will certainly be reflected in your trading performance. If you do not have discipline, give up. If you have the discipline, and if you really understand what you should do, then plan the trade and trade the plan. Follow our webinars, follow my recommendations, analysis, recaps, and trading school. If you have any questions, guys, you can ask me now. If you don't have any questions, well, then I assume everything is clear and that we can call it a day. So do not forget to sign up for more webinars, okay, session recaps, because trading only session recap can really give you huge amount of profit, at least pip count. Okay, and Chris also, trend line trading, it's important for you to know. We will also cover that in price action trading school. Trend lines and channels, step by step. This is cool, so it will last for a full year. Everything will be covered and you should be much better after this. Okay, so pay attention to it and do not stray away from your trading plan. So I don't see Darshan is asking any views on New Zealand. Well, now guys, we are not talking about specific trades, but New Zealand is very susceptible for today reassessment of Reserve Bank about rate cuts, rate hikes, or maintaining the rate. So it will be official cash rate decision, I think, today, and there will be a Reserve Bank of New Zealand statement. So I don't know how it will be handled, but the thing is, it still has a chance to go down. But if something unexpected happens, also it can spike up. So I would not mangle with New Zealand dollar today. Always pay attention to your calendar. I don't know how the statement will go, because my final target was 61.50 with 63.40 to 50 entry, but it went above it. It broke the channel, so I need to reassess New Zealand dollar after today Reserve Bank New Zealand meeting. So I will reassess the chart based on their statement and current price action. So that's it, guys. I wish you to trade safe. I'm always here for you to help you. Thank you for your comments, and we will be in touch very, very soon tomorrow. And of course, we are going by our standard procedure on webinar scheduling. Okay? Thank you for questions. Thank you for comments. I wish you to trade safe. And as always, guys, as always, pay attention to your risk. This webinar is being recorded, so for all of you who have joined up later, you will be able to watch it tomorrow again, because it will be uploaded on Admiral Markets YouTube channel. Thank you, and once more, talk to you soon. Cheers.